my friends. Chris Marcus here with you on Friday, March 2nd for what I personally think is going to be a special edition of Arcadia's weekly market wrap-up. I say that because, as usual, fascinating events happening. I don't know if anyone else notices them, but we're going to cover a few developments going on and see if they may be connected. Seems like Washington has not clued in on that yet, but that's why we're making this video today. So if the president needs any economic assistance, here we are. So to start with, speaking of the president, markets feared Trump would light the fuse on a trade war, and maybe he just did. So the big news on Thursday were Donald Trump's plan to slap tariffs on foreign aluminum and steel, which could help U.S. producers, but also fuel inflation, slow the economy, and a bunch of other things that are really not ideal that happen when you get involved in trade wars, because somewhere you end up making things more expensive for someone. And here we see a 25% tariff on steel and a 10% tariff on aluminum. It's actually kind of funny when you think about how these numbers come up, because a couple of years ago I read Dick Cheney's book, which was interesting. And there was one part where he mentioned how, I guess he was part of Nixon's team back in the 70s, because he talks about when Nixon took the US off the gold standard. And at that same announcement, they also implemented price controls. And it was not funny yet, really funny, where Cheney in his book describes him, I believe Rumsfeld was in the room too, where there was it sounded like some all-nighter bunch of middle-aged white men chain smoking cigarettes. And he talks about how they were debating, well, I'll say we can increase the price of toupees by 10%, and in exchange, we're going to raise dill pickles by 5%. And this was actually how these things are getting decided. So when you see 25% tariff on steel, 10% tariff on aluminum, either case, it's going to make things more expensive for people. Although, even aside from all of that, let's just take a quick review and see what's happened in our recent past here and why there's perhaps a bit more to what's going on. Here we have January 10th. China weighs slowing or halting purchases of U.S. treasuries. Again, where is Bloomberg getting this from? Is this exactly what's going inside of the Chinese government? I couldn't tell you that for sure, although it's logical enough. And the reasons cited for why they might reduce or stop buying treasuries, as you can see down here, the officials recommended that the nation closely watch factors such as the outlook for supply of U.S. government debt, so how much debt is out there, along with political developments, including trade disputes between the world's two biggest economies, when deciding whether to cut some treasury holdings, the people said. Again, the people said, is that actually Chinese government? But I mean, it's just logical enough that they would be thinking this. And so basically two factors. Now, here's the national debt. And it's interesting looking at this chart because you can see things they weren't ideal back in the 80s or 90s, but keep in mind that when you hear the 20 trillion or so that we've hit here in 2018, when Bush came into office, I believe it was about 5.7. By the time he left, it was over 10. Obama's reign doubled it again, and Trump continuing that trend. Because while tax cuts can be a good thing for the economy, it'd be even better if it was accompanied by a decrease in spending. But it's interesting when you look at this chart, actually does look kind of similar to perhaps the Bitcoin chart. And when you think about, if you think metaphorically of cryptos as an alternative to a dollar debt-based system, pulled up on a couple of the previous videos how the money supply chart looks exactly the same. So if the debt and the money supply are increasing exponentially, then certainly as compared to a currency that, if nothing else, can't be printed at will, that's why the crypto chart looks like it does. That's why even if you just as stagnant as gold has been the past couple of years, still look at the chart again, that looks similar. So just remember, these are fractions. So when you see other things going up in price, you begin to understand why. Of course, again, to China's point, is there going to be any reduction in the debt? And here's something that not a lot of people heard about. You barely find much if you Google it. But in the last Senate deal on spending, which increases government spending by nearly $300 billion over 2 years, it would increase discretionary defense spending by $165 billion, and then another 131 for God knows what else. So all of these government shutdowns and inability to meet budget deals, remember, they're not getting all heated because they're making difficult cuts and programs are going away. We're still talking about the rate of increase and how much more to spend. And here was a little doozy that they stuck in there. The deal includes an extension of the government's debt ceiling limit to March 2019. The Treasury Department has warned that without an extension in borrowing authority by Congress, the government would run out of borrowing options in the first half of next month, risking default. Now, this is a little bit of a twisted phrasing here, in that the government would run out of borrowing options, risking default. That's absolutely untrue, because let's say comes next month and you hit the debt ceiling limit, you don't need additional borrowing if you stop spending more than you're taking in. So it's not a matter of hitting the debt ceiling limit and then being at default. It would just require matching the spending with the intake of flows, because then you would not have to go past it. But in either case, just lift and raise, pushed off another year. Why bother even having it at this point? And so again, we look at how is China responding. We continue to hear the implementation of the petro yuan. Chinese rating agency has downgraded U.S. debt. And now to the second point of that article about, is there going to be an easing of these political tensions? Now we see Trump's tariffs. This was an article again from yesterday. Trump tariffs may anger China, and here's how it may retaliate. And let's highlight number 2. Number 1 and 3, U.S. agriculture is particularly vulnerable to Chinese actions, and Goldman Sachs fears exchange rate depreciation. Both interesting in their own right, although, again, number 2 there, one concern is that China, the largest holder of U.S. treasuries, may decide to reduce its purchases. Well, it would certainly seem to make enough sense, which is why, you know, it's amazing how, given it's not early in the game anymore, and yet still, as the debt grows and tensions and foreign presence grows, there's still it reminds me of the great Frank Drebin. So that's basically how it's looking, because it's amazing that these things happen and they just they just act as if there's nothing going on. So you can take a look at the yield chart, which actually has come back in a little bit this week, had been rising for the last couple months, finally a little bit lower. Was interesting on Tuesday, Jerome Powell was talking in front of Congress. And at one point, he basically indicated that he thinks the economy is doing great and may proceed with interest rate hikes faster than expected. And as that happened, yields actually spiked, I believe it was about 5 basis points, which, yep, down here, 10-year jump to 2.91%, which again, just interesting, because if they do continue to raise rates and at the same time you have China possibly not buying as much of the debt, then that is why you're seeing things like the stock market down quite a bit, really since, what's this high point here? It looks like January 26th, you have the Dow at 26,600. Has had a rough February, as you can see here, and again plunged yesterday on the news of a potential trade war. Again, at the same time, interest rates have been going up. U.S. new home sales drop again, although the economists say that it is likely due to weather, as weather likely played a factor in new home sales, says TJ Connolly. It always seems to be the weather is the reason for any of these downtrends in the data. Certainly, if interest rates continue to go up for the same reason that you saw the housing market get clobbered back in 2007 and 2008, you will continue to see housing experience trouble going forward, unfortunately. Of course, the response to that is that we will probably see more money printing at some point. I'd say good shot for 2018. And again, why, as much as it seemed as if there was a funeral for the crypto sector in the last month or two, a lot of the momentum and excitement seems to have faded. Although with that said, Bitcoin was at 20,000, went down below 6,000 about a month ago. Yet it's interesting. Here we have today 10,956. Had crossed 11,000 yesterday, and just from the perspective of, is this a complete bubble of nothing of value? Certainly the price has been volatile, yet still here we are with everything that's happened. Has gotten the blessing of the CFTC. Now the SEC is investigating. My quick thoughts on the SEC is, you know, if they actually cut out fraud, then great. Just keep in mind that the SEC was given detailed information about the Bernie Madoff Ponzi scheme, which somewhere north of $50 billion loss. Actually just got a new book about JP Morgan's involvement in the Bernie Madoff scandal, which suggests, I believe, that the amount could have been quite a bit more. Either case, we'll dig into that one and report back. But, you know, just that the SEC had been receiving a lot of detailed information from Harry Markopolos, warning in advance about this. And as I recall, it was a couple of years ago I read it, but largely ignored for political reasons, or they just didn't believe the guy. And in either case, the idea that SEC is going to come in, who knows what they're going to do. Although even with that said, there you have Bitcoin at 11,000. So it's not as if the market has deemed it worthless. Litecoin at $206. And given all these trends that are happening, when you see the money printing that's going on, when you see how the major trading partners are being driven further and further away and they're issuing ultimatums, and it's just responded back with more antagonization. Anyway, I think you're going to see cryptos continue to go higher. Keep in mind that China has been on a massive gold and silver buying spree, so manipulation in the markets or not, I believe we're getting closer to the point where they're going to go higher. Hopefully that will be 2018. I feel hopeful about that, although, again, given as long as stunning to myself, as well as I think a lot of others in the precious metals community, that prices have stayed as low as they have for the past 7 years. So Whether that is resolved this year or perhaps it takes another year or two, hopefully not. But again, when you're looking at these underlying fundamentals, imagining what's logical to happen next. Anyway, that's what I'm seeing. So maybe you disagree, leave a comment below, let me know. But hopefully that was helpful. We're going to wrap up for this week, and hope you have a great weekend, and I'll see you soon.
The land of our